The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day, so you can be up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and that anything shared in our content should not be construed as financial advice.
5, 4, 3, 2, 1.
Where does the allocation of funds happen right now?
It'll go exactly where you want it to go. The next bit after that, you'll enter it and then it'll go up.
How would you enter, right? What if you're new to order blocks? What if you're nervous, right? Let's say.
And the correction moves is in the A, B, C move.
Today's stream is made possible by our partners and sponsors. If you're looking for a new broker, trying to get funded, or looking for a trading community to join, consider checking out the links in the description below. By using these links, you'll get access to great products and be supporting the channel. Without further ado, the show is about to begin.
Welcome back, everybody. The next stream has arrived, and we've got a very special guest to help us with this crazy market right now. Let's bring him in. Mr. Matt, how are you, sir? Welcome to the stream. Happy that you're here.
Hi, Nick. How are you?
I'm great. So, Matt, tell us a little bit about yourself. Of course, this is your first time coming on A1 Trading, which is awesome. Tell us about yourself and what kind of stuff do you get into? What do you trade? What are your styles?
Yeah, well, first off, thanks a lot for having me. I really respect, what you've done in the Forex space and now what you're doing with this channel as well. I've been trading for about 4 or 5 years now, and my style has kind of changed a little bit over time. I started off with more price action pattern trading, and then I've shifted over more to really setting a lot of pending orders and looking for high confluence areas. So that's kind of what I've been doing. And I'm super interested in fundamental analysis too, kind of understanding what's going on in the market, what's going on in the world. I was watching your previous stream and I know you pulled up the CAT unemployment data. So that was pretty interesting. We're seeing how that's having a big move on the market today. So that's kind of how I trade. And I like keeping things super simple, higher time frames. The 4 hour is kind of the lowest that I'll go. Do mostly daily charts, weekly as well. And that's kind of how I approach things.
Awesome. So good mix of, mostly swing trading, a little bit of fundamentals in there, and looking for high confluence, lots of price action stuff.
Yeah, not a ton of price action stuff. I used to really look for that confirmation with candles printing and whatnot. But really, if I see an area with a lot of confluences, personally, I look for 3 on the daily. So I'll use trend lines, Fibonacci, moving averages, key levels, kind of your typical stuff. If I find an area that has 3 of those lining up, I'll just throw a pending order right on there, not wait for price action to confirm whether it's going to work or not. And that kind of lets me have a little bit of a tighter stop loss because I'm not waiting for that confirmation. Certainly, sometimes it doesn't work. It'll just blow right through. But other times it does work quite well.
Sure. I'm kind of with you. I actually don't use like a million things to tell me to, I don't look for like confirmation or wait for candlestick patterns. I personally mostly will just take a zone and, if I like it fundamentally and support resistance wise, trend wise, I'll go with it. So, Matt, if you would like to, do you have any markets that you'd like to maybe pull up on the screen and share? If you'd like to do that.
Yeah, certainly. We could look at pound yen because I was looking at that today. So I can certainly pull that up.
Yeah, so if you share with the share button at the bottom of the screen, that'll give you the chance just to pull your thing up, and then we can let the whole crowd see what you're looking at. It should be awesome. Cool.
Can you see
there we
it?
go. Pull that in. So there's your screen. Okay, so you're looking at pound yen. Tell us about pound yen.
Yeah, so I was looking for a sell this morning. It looks like it's going to be a missed trade, but nonetheless, I can show you what I was looking at. So first off, we had a 38 fib retracement. So this red line here, which was from the high to the low. And then I threw on a secondary one. It's a little bit more clear on the 4 hour, but on the daily, you can see it nonetheless. It's from this high here. And you can see that the 38 fib that we had lined up really nicely with this more minor 61 fib. And then if I do recall on the 4 hour, this purple moving average that I have is the 800 SMA. So again, the market doesn't hit it that often, but when it does, it's pretty significant. So that was kind of the third confluence that I was looking at there. But as you can see, It looks like we've just missed. We're getting more of a bounce from the 50, but that is what I was looking at this morning. And for me, this is pretty typical, especially with this system or strategy. I see a lot of traders will leave their pending orders if we come super close, and then the market will kind of just break right through it. But I'm pretty adamant on actually canceling your orders if the market does get really close, because it just becomes much higher risk. You're kind of essentially just waiting or hoping for a double top or a double bottom, depending on whether it's a buy or sell. So I have canceled mine, and it looks like I'll need to look for something for next week.
Sure. And that makes total sense. I like the point that you made. If it starts running away from you, every pip that it moves away from you, that risk to reward kind of suffers a little bit, right? Because like you had your level and then it didn't hold it or didn't get to it for you to actually get into the trade. So any pip that it moves away, it's like, that's not where I wanted it at. So I'm taking on extra risk by chasing the trade.
Exactly. Do you use a lot of pending orders yourself, or are you more of a market order entry type of trader?
I'm definitely more market order. And the reason for that is just because like probably 75% of my trade starts with fundamentals and what that's going on. I like to just look at like, okay, here in the now, what is the most current thing? If there's something that comes along that, you know, makes it blow right through an order and never had the chance to reevaluate before it got there. So,
right.
Yeah,
Makes
that's
sense.
just my personal take though.
How have you been finding the markets recently? Because it's fundamental wise, there's so many different variables that have been going on, you know, with inflation fears, interest rates, you know, the war in Ukraine. Like, have things just been crazy for you the last couple of weeks?
So I'm getting interviewed here, which is awesome. Great question.
I like learning from other traders. Yeah.
Yeah, no. It's excellent, because here's the thing, right? The markets recently have been a really rough place for a lot of people. So I don't want to pat myself on the back, but they have been a really good atmosphere for my particular style of trading. I don't use take profits. I use no take profits, only stop losses, trailing stops using price action and structure, things like that. So these current environments with risk off sentiment kind of taken full swing. I've been bullish on gold. I've been bullish on the dollar, and it's been a really kind of a kind place to just hold on to winners right now. Because, you know, if you catch something like this, let's say that your pound yen trade here had caught in and then swings back down in terms of risk off, and, you know, you didn't have a target on it. You just let it fall through the floor and it just kept going. Those sort of trades are the ones that I'm after in my personal, you know, trading. So that's been kind of forgiving. I'd love to hear, Matt, what do you think about gold recently? I don't know if you traded or not, but I'm curious to see if you have any takes on the gold market.
Yeah, I used to trade gold a lot, actually, and just based on, you know, the insanity that it sometimes can be, I just slowly over time moved away from it. But I do keep an eye on it. I have to say the last week or so, I haven't taken a close look at it, but I do know that it just continues to rip higher. Which obviously is understandable based on what's going on in the world. Like, I think it's reacting exactly how I would have expected it to. And I think a lot of traders would have expected it to. I guess the question is, you know, are we going to continue to see this huge movement to the upside, or this huge momentum to the upside? I'm not sure, but just from a technical standpoint, I'm kind of inclined to, you know, look for some kind of retracement here to enter or buy, because it's really a remarkable move that we've had all the way up to $2,070, which is just nuts. It's huge.
It is for sure. And the crazy thing about gold is, you know, if you scroll like way back out, if you're looking at like the weekly and monthly charts, the crazy thing about gold is that gold, at least in my studies of gold, it makes like majority of its moves really quick and then sits there for the rest of the time. Like, it just doesn't do a whole lot for a lot of the time, but then in just a short span, like what we're seeing right now, war breaks out, serious market concerns, commodity flying, inflation flying, we see gold fly like a rocket, just in a very short burst. So I've been kind of riding that. I've been trying to trade that, and I was curious just to see your take on it. I'm with you. I definitely think that there's probably a pullback in order for, you know, setups and things like that to try and resume, you know, looking at this. I think you made a point earlier that I loved. You talked about, you know, when you're chasing the trade, the risk to reward kind of starts worsening. So I'm kind of with you on that. I think there's probably better to risk to reward. You're looking for pullbacks.
it must have been super boring for you the last several months. Like the sideways movement that we had was just, you know, ongoing for week after week. We certainly these smaller moves you could have potentially caught, but any kind of significant breakout was just not happening. So if traders did profit from this, that's great. And it kind of brings it back to the point that you mentioned of how an environment like this, if you don't have a stop loss, is great. But I think for other traders, environments like this actually are terrible, because if you're waiting for if you need some kind of retracement in order to enter a trade. So for me, if I'm entering only on retracements with pending orders, and you miss that initial movement on whatever pair it is, it's just devastating because there's like no trades for you to take. So I think it's good to have kind of an adaptive strategy in times like this, because it is unfortunate if you just miss out on these huge moves, because they only happen a couple times a year.
Matt, you made such an excellent point right there. I cannot agree with you more in that sense, because the thing is, right, I've gotten so many comments on the live streams and the videos recently, exactly what you're saying. Hey, Nick, I haven't been able to catch any trades this week, even though the markets are moving so aggressively. It's like I just got left behind. And, you know, I could turn it around and say, to be fair, Matt, there are times where, you know, I don't take profit and then I just leave so much that could have been on the table. So there's never a perfect way, but you make a good point. Sometimes the markets will do these crazy things, and it is very, very frustrating to feel like left out of the best moves that are happening. So I definitely agree with you there. And I think that, I don't know, what would you say to those people who are like, man, there's no trade setting up for me and I'm missing the move? What would you say?
Yeah, I think it's a double-edged sword, because there's something to be said about just sticking to your strategy no matter what you're doing. Like, it's easy to try and mix things up, and you could have potentially caught a big move, but you just as easily could have gotten stopped out and lost a bunch of money. So there's one thing to be said about just sticking to your strategy, but then having some kind of flexibility could be good too. So I don't know if there's a black and white answer for every trader. I guess it's dependent on their style, but recognizing that sometimes there's going to be big movements in the market, and kind of creating some sort of hole in your strategy, hole being a good thing, where you can kind of enter into that swing move would be great. But again, it's tough, because I'm always super adamant on sticking to your strategy. And if your strategy isn't, you know, providing you an opportunity to enter these swing trades, then maybe that's just kind of, you know, the name of the game. What do you think on that?
Definitely. I would agree with you. I mean, I think that the easiest thing, or the most like tempting thing, is to change everything around, or, you know, even get frustrated and try and short some of these moves. And, you know, you're just like tempted by the I want the action now, and I hate, you know, you're either chasing or you're shorting something that's really strong. Both of those are really dangerous games to play. So I think that you kind of make the point that I would agree with this, in the sense that the best thing to do is just to stick to your guns, stick to your strategy, and just, you know, walk away if you need to. Wait for the markets to send you an alert to your phone or something that things are back to normal. But if you're just watching this thing sail away, it can be a very, very painful. I almost think that personally, watching a move that you want it to be in on flying away is more painful than taking a loss. Like, it's the worst feeling if you sit there and stare at it.
Especially now, because you're waiting, like, it's been 2 weeks now that we've had these huge moves. Like, if you missed, say, Euro New Zealand or Euro Aussie, like, we've had this massive drop on both pairs. And if you missed it, and it's something that you could have potentially gotten in on, you're just sitting there and you're just devastated, because there's nothing for you to take at this point, whereas you could have been sitting in nice profit. So
Absolutely. And I think right now, Matt, is probably like the most FOMO in the markets that I personally think I've ever seen. Like, FOMO right now, in terms of comments on my channel, and just like my personal feelings. Like, of course, I'm in some good trades right now, but there's always more, right? That little voice in your head, you're like, well, I was right about this, but I didn't stay in this, right? So you're always battling that little voice in your head. So it's definitely very dangerous to listen to.
Yeah, I know when I first started and I would see a huge move like this, I would think to myself, well, it's just going to continue dropping, right? And then you can easily get into a trade that you shouldn't be getting into, because you think, oh, it's going to continue. Look at the momentum. But then, you know, it always retraces. It always reverts back to some sort of a mean or an average. So I think traders need to still be super careful, even though we might still have a lot of momentum in the market. about just hopping into any of these big moves.
Exactly. Yeah. And even now, Dizzy in the chat just says, I didn't miss it, but I took profit too early. And I feel like that's also, what we talked about earlier. It can be very frustrating. You're very right, but you weren't as right as you thought you could have been, I guess. Or whatever,
Totally.
right?
And do you always trade without a take profit level, or is it really only when there's kind of these large fundamental drivers that are really making the market trend?
So I pretty much always trade without, and I have
Okay.
a very fancy name for it. I call it true trend following, because a true trend following method in my studies, and I've researched a lot of different really famous trend followers and things like that. They tend to, the trend is your friend until the end, until it
Right.
ends, whatever you want to say. The idea really is not getting out until the trend is ending, because a trend can go for, as we're seeing right now, so much longer than you ever could expect it to. It doesn't always do it. And in fact, it rarely does it like we're seeing right now. But when it trends, for me, true trend following means I'm not just going with the trend. I'm staying with the trend until it's no longer trending. And for me, the best definition of that in my personal back testing and trading is riding it with a stop loss, but trailing in and never kind of calling the bottom or calling the end of the trend or trying to take profits. And that is not for everyone, because I will say it looks really good right now, but it's really, really crappy when you take several stop losses or you take small trades, break even, small wins for a long, long time before catching the big moves. So it's just
Right.
a personal approach.
And I think that brings up an interesting point, because a lot of traders who will get stuck during those more sideways movements or get discouraged by stop losses or small wins, they might be inclined to not stick with the strategy. But I feel like a strategy like this, or any kind of trend following strategy, the majority of your money is probably going to be made on just a handful of days, because
Yeah.
like you said, there's not huge moves like this every week or even every month. So I think that there's a lesson there that you have to, no matter what, continue with the strategy. Otherwise, there's going to be a lot of people on the sidelines now that are like, man, like I missed this. And, the unfortunate reality is, we might not see another move of this size for another 6 months or who knows how long, right?
Exactly right.
So I think there's something to be said.
Exactly right. And Matt, I want to show you, because what you just said is so true. I'm going to try and show you to illustrate what you were just saying. Let me see if I can pull this up and just get my screen on here. So on my performance, right, you're so exactly right with that. Like the what we're seeing here is my performance here. And what you'll notice is that there are these like huge moments in time where there's like these major gains. And that's exactly what you're saying. They're so
Right.
rare, because look at these periods of time where you just have nothing, no fun, no action, just small gains, small losses. And then, like you mentioned, several or just a handful of days in over a year of trading this strategy here that have been like the major players. So exactly what you're saying. So you're very right about that. And what you mentioned, this period of time can be so incredibly frustrating. This period of
Right.
time was really, really frustrating, because I was not making any money. I was trickling lower for like months, right? That's really annoying. So you're so
Yeah.
right about that.
That's so interesting, because so many traders will think that, if you have 5 trades in a row, you're the worst trader in the world. Or if for 3 months in a row, you're not turning a profit, oh, I'm doing something wrong. But the reality is you might not actually be doing anything wrong. It might be just the market conditions. And so it takes so much discipline to stick with it. So it's so cool to see that, because it's a perfect proof of exactly that.
Yeah, no. And that's the thing. Like, there are different ways to approach the market, but you've got to understand that it doesn't matter. It's kind of like playing rock, paper, scissors. Everything has a weakness. Everything has something that kills it, something that is really tough about it, right? If you're a rock, you can beat the crap out of scissors, but you lose to paper, right? So if you're trend
Right.
following and you're trailing stops, that looks great when the markets are going in one direction and you're in on the move. But it looks terrible when the markets go sideways and you're just getting chopped around. And so, yeah, it's excellent points there. Matt, do you have anything else that you're looking at right now in terms of, so you mentioned that Euro Aussie, you're probably on the sidelines with that. Me too, by the way. I wish I was in that move. That would be the
Yeah.
ultimate shoulda, coulda, woulda. You have anything else
I
you're
know.
looking at?
Yeah, Euro New Zealand too, same kind of thing. It was really pound yen that I was looking the most at in terms of taking a trade more recently. But I have been watching the stock market super closely because it's just been so volatile and really exciting. But it's kind of really guided me in developing my bias for what the Forex market is going to do. And I feel like a lot of traders don't look at stocks. They're either saying, I'm a Forex trader or I'm a stock trader. But
Right.
I've come to learn that everything is so closely connected. So really keeping a close eye on the stock market has really helped me a lot develop a bias. And I was watching your previous stream and you mentioned that your bias has been short on pound yen. And my bias has been short on pound yen too. And I think it's a perfect example, what's going on with stocks. It's a perfect example with pound yen for how that's impacting our bias, right? Like with the yen being our safe haven currency or one of the market's safe haven currencies, I think it's much riskier to be trying to take any sort of buy on pound yen. Right. Whereas if you really approach that chart thinking, I'm only interested in sells. And I've been showing on my channel for the last several months, just from a technical standpoint, we've had this 200 moving average on the monthly chart for months now, and we just can't break above it. And so even if you're not looking at fundamental analysis, what's going on in the world or the stock market, this would be a technical reason to maybe have a short bias. But if you combine that with what's going on, interest rate fears, the war that's going on, then I think that this short opportunity, which was hundreds of pips, was pretty clear. Unfortunately, I have to admit, I didn't catch the majority of this move. But in hindsight, it's pretty clear why this happened.
Yeah, that's actually a really good point. I mean, the thing is, right, I don't like to short the stock market, but I do like to short currency pairs that make sense to do, like pound yen.
Right.
The stock market just has this inherent float to the upside, but the pound yen, not so much. So that's kind of where I like to be a little bit more short bias on something like that. And who's to say it can't go back down if these fears continue to mount? The pound yen could be an excellent short, not for 50 pips, but for hundreds and perhaps thousands of pips to the downside until those fundamentals change. So
exactly.
Yeah.
And you mentioned that you're about a 70% fundamental trader.
Yeah.
So let's take the war as an example, Russia invading Ukraine. When that piece of news came out, what did you do in terms of applying that to your trading? Do you still look for, a technical reason? Does the news just guide your bias, or do you kind of hop into a trade right away?
So the way I like to look at it, my personal approach is fundamentals tell me direction. Like you mentioned, sells only on pound yen for the time being. That's a directional bias. So that's how I approach the fundamentals. But then the technicals are where I actually enter and build those risk rewards. So that is pretty much exclusively my strategy in a nutshell. Is
makes sense.
Fundamentals for direction, technicals for entries and exits, risk management, risking really tiny per trade to make sure that I can withstand drawdowns when they do come. That's pretty much my strategy in a nutshell. It sounds like the more I talk with you, it sounds like we have a very similar approach in terms of risk reward and fundamentals and market analysis.
Absolutely. Yeah, I love fundamental analysis because, an 8-year-old can draw a trend line. It's not like complicated stuff and it gets boring pretty quick. And I always say that boring trading is good trading. Like when you pulled up your MyFX book stats, it's kind of boring, but that's good. You don't want these massive moves to the upside and then the downside.
Excitement there is kind of dangerous.
Yeah, exactly. Yeah, you want things to be like slow and steady. And so I find like if you're looking for that kind of excitement, at least for me, fundamentals do that, of like reading about what's going on in the world, what's happening in the next month, especially now there's so much going on. And so that could make it more difficult, but I also think it's an incredible learning opportunity right now because there's so many different variables that are driving the market. So if you're somebody watching this and you don't really read the news or understand, the economic drivers behind currencies, I think this is an awesome opportunity to kind of start learning.
Yeah, and even to add to that, it's an excellent opportunity if you're losing money, if you're struggling, to just sit back, demo trade for a while and learn these fundamentals because they are seriously driving the market right now. Like the markets, the technicals are great, trust me, for just, looking at entries and exits and things like that. But the fundamentals are headline driving the markets around right now. Like that is what is, you see a change, and it right now, you made a point earlier about gold, exactly how you would expect it to move. The fundamentals are pretty clear right now. Like despite the charts being crazy and the volatility being really high, the fundamentals, there's been some twists and turns along the way, but they are driving the market exactly how you would expect to drive them when they come out, which is sometimes not always the case. So
Totally.
yeah.
Yeah, I'd love to get your opinion, not to interview you or anything, but I'd love to know what you think about the current market conditions. Like, do you think over the next 1 to 2 months we're going to see continued downside in the stock market, and therefore, like a stronger yen, a stronger US dollar, gold continuing its movement to the upside? What do you kind of think about that?
Yeah, so it's an awesome question. I think it's hard to say, right? And part of the reason I say that is because just like a technical wise, I call my strategy the TTF, the true trend following. Same with fundamentals. I don't try and predict turning points in fundamentals either. So when I look at fundamentals and I say, okay, commodity markets rising, Russia, Ukraine scare, inflation problems, Fed hawkishness, I put all that together. That's the story right now. I'm with it. I'm not changing until it changes.
Right.
I won't try and say, I think peace talks around the corner. Maybe they are. But saying that for the last 3 weeks has gotten you nothing but more pain. So I'm fundamentally trend following as well, if that makes sense. And you can't do it so easily on a chart, but fundamental trend following is just you see a change in the market, you go with it. When the change happens again, you go with it. So that's how I approach the fundamentals.
Okay.
So
I think that's great because even for myself, like it's easy to get into the habit of saying, well, this is happening now, but it's very likely or possible that X is going to happen. And if that doesn't happen, then you just end up taking a whole bunch of losses that are unnecessary. Whereas if you're following the trend, that's not going to happen. So I think that's a really good lesson, or maybe a takeaway of today, of like, just, trade what's in front of you and not what you think is going to happen, because it might not actually happen.
Well, and because you might be right, but the default right now, right? If this situation is going on, the default is for oil to continue rising. And if you try and call what's going to happen next, but you're 3 weeks late, it doesn't matter. You're sitting in a huge, if you're shorting oil and the market just keeps floating higher, because by default, it's just going to keep getting worse, but eventually it'll change. Sure. Things always change in markets. So eventually it will change. But for now, I'm just going to go with the default. I'm going to go and ride what's happening in front of us, like you said. And when it changes, I'll adjust. But I'm just, the thing about markets is that it's incredibly hard to predict what's going to happen next. Life is hard to predict, right? So markets for me are just like, I don't predict them. I don't try and predict what's going to happen. I just go with what's happening, like you mentioned. So definitely, these are amazing questions, man. You came ready today.
Yeah, thank you. Yeah, I think there's that very well-known quote. I'm going to butcher it because I can't remember who it's from, but it's something along the lines of like, the market can continue moving in a certain direction much longer than you can remain solvent, right?
Mm-hmm.
Like the market will keep doing what you think is the wrong thing for as long as it wants, and you'll just run out of money. So it's much more important to actually focus on what's in front of you.
Exactly. That's so true, man. Matt, it's been awesome having you on here. I'd love to have you come back at another point and chat with you more.
Absolutely. That would be anytime. I will be here. Like I said, I really respect what you've been doing. And like you said in your previous live stream, I've come to learn, I haven't had my channel for that long, but I've come to learn the Forex community is actually really wholesome. Whereas, it can sometimes get a bad rap, but like if you're actually in the trenches, the comments are always so kind. Everybody's like working hard to improve their trading, to improve their life. So I'm happy to be a part of it.
For sure. Matt, how can people find you? Because I'd love to make sure people come check you out and get some more content from you. What's your YouTube channel called?
Yeah, my YouTube channel is called Meet Matt L. So you can find me over there. I'm posting 3 to 4 videos a week about Forex, stocks, fundamentals. So you can check me out there. And then I have an Instagram as well, where I post all of my trades on my stories. So you can kind of stay up to date on a day-to-day basis as to what I'm doing, whether I'm taking trades or what I'm looking at. And that is also Meet Matt L. So you can find me over there as well.
Awesome. There you go, guys. Go light them up. Go give them some subscribes, follows. Let them know if you enjoyed today's stream. If you learned one thing out of today's stream, go check out Matt. And if you're new to the A1 Trading channel, make sure to subscribe to this one as well. We're bringing people on and just having these conversations every day to hopefully just offer some free value to the trading community and continue to make it hopefully a little bit more wholesome each day. Matt, thank you very much for coming on today. It's been awesome. Today was a great stream, and definitely looking forward to having you come back.
Thanks, Nick. I had a great time too. I learned a lot from you as well. So if I do come back, get ready for a few more questions.
Good news. Awesome. Well, Matt, thank you for coming on, and we'll
Thanks,
see you
Nick.
next time.
Take care.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember to check the description below if you're looking for a new broker, trying to get funded, or looking for a trading community to join. From all of us at A1 Trading, have a great day, and we'll see you next time.